It was supposed to be the big payday we all waited for. For 5 long years, silver owners watched the charts and waited for their moment. First, the price crossed $50, then $80, and finally it smashed through $100 an ounce. People everywhere cheered and looked at their stacks of coins. They checked their phones every morning and saw their net worth climbing higher and higher. They thought they were instantly rich because the news said silver was at a record high. But then, something very strange and scary happened when they went to the store. They packed their heavy bags of silver and drove to the local coin shop to cash out. They walked in with smiles, expecting a celebration and a massive payout. Instead of a warm welcome, they found a very different scene. The shops were quiet, the owners looked stressed, and the buying counters were closed. The shop said no, or they offered prices far below the market value. This is not a story about the price going down. This is a story about the market gears grinding to a total halt. We call this the Great Silver Paradox of 2026. The price on your computer screen says one thing, but the real world says another. You have a valuable asset that is worth a fortune in theory, but in practice, you effectively cannot sell it right now. Welcome to the Bullion Ledger, where we track the truth behind the money. If you are new here, hit that subscribe button to join our community of elite stackers. Today, we are going to explain why the silver market broke and how you can survive it. To understand why you can't sell, you have to look at how the metal moves. When you sell your old silver coins to a shop, the shop does not keep them forever. They act like a grocery store for money, moving product in and out constantly. Usually, they sell your old coins to a giant factory called a refiner. The refiner melts the coins into pure bars and sells them to companies that make things like solar panels. The refiner pays the coin shop, and then the coin shop pays you. It is a big circle of money and metal that usually runs smoothly. But in January 2026, the pipe clogged up completely. First, the price of silver tripled very quickly, which caused a massive financial problem. Refiners borrow money from banks to buy your silver, just like using a credit card. They have a limit on how much they can borrow to buy metal. When silver was $30, their credit limit could buy millions of ounces. But when silver went from $30 to $100, the math changed. The refiners used up their credit lines 3 times faster just to buy the same amount of metal. They ran out of cash to buy the metal from the coin shops. They were physically able to melt it, but they were financially unable to pay for it. The furnaces were hot, but the bank accounts were cold. Then, nature decided to make the problem even worse. A giant snowstorm hit the state of Massachusetts, burying the roads and the factories. One of the biggest refiners in the world is a company called Metalor. Their factory got damaged by the snow, and they had to stop taking shipments completely. Trucks full of silver were literally waiting in line outside the doors. Before this crisis, it took about 2 weeks for a dealer to get paid. Now it takes over 90 days for the money to move through the system. Coin shops cannot wait 90 days because they have bills to pay today. They are stuck in the middle of a traffic jam. This is why you see closed signs on the buying counters. The saddest part of this story isn't about the money you can't get. It is about the history we are losing every single day. We are watching a numismatic extinction event happen right before our eyes. Look at the famous Morgan silver dollar from the old days. It was minted over 100 years ago and is a true piece of American history. For a long time, it was worth more as a collectible coin than as a lump of silver. Collectors loved the art, the history, and the story behind the coin. That was the old math that protected these coins from the furnace. Here is the new math of 2026. When silver hit $80, the silver inside the coin became worth $63, but the collector value of the coin stayed around $45. This created a deadly incentive for dealers. This means the coin is now worth much more dead than alive. If a dealer sells it as a coin to a collector, they actually lose money. They cannot afford to keep it as a piece of art. If they melt it into a generic bar, they make $20 profit instantly. So, dealers are doing the only thing they can do to survive. They are shipping bags of these historical coins to the smelter. We are seeing truckloads of 1921 Morgan dollars being destroyed. These coins survived the Great Depression, World War II, and the inflation of the 70s, but they are not surviving the great silver rally of 2026. The furnaces do not care about history or art. They only care about the purity of the metal. Beautiful eagles and Lady Liberty are turning into gray sludge. Every time a coin is melted, it is gone forever. You cannot unmelt a coin and bring the history back. This means the coins that survive will become extremely rare in the future. If you own these coins, you need to understand what they are. They are currently being treated as scrap metal, but in 10 years, they might be the rarest items in the market. Hold onto them because they aren't making any more of them. The supply is shrinking every hour the refineries are running. You are the guardian of this history now. You might be worried that the price of silver will go to zero. You might see the frozen market and think this is a bubble that is about to pop completely. But there is a safety net under the price called industrial demand. Silver is not just money anymore. It is a strategic chemical ingredient. It is absolutely necessary for the global energy transition. Solar panels need silver paste to conduct electricity efficiently. Without silver, the panels simply do not work well enough. For years, scientists tried to use less silver in each panel. This process is called thrifting, and it worked for a while to keep costs down. But by 2025, the solar industry hit a thrifting wall. The new high-efficiency solar panels actually need more silver, not less. The factories cannot stop buying silver just because the price is high. They cannot switch to copper or aluminum because those metals don't work as well. They need the best conductor on Earth to finish their products. This creates what we call inelastic demand. It means the factories will pay whatever price is necessary to get the metal. They have orders to fill and energy contracts to meet. This keeps a floor under the price of silver. Even if investors sell, the solar companies must buy. Artificial intelligence data centers also use massive amounts of silver in their chips and switches. The AI boom is driving demand even higher than anyone expected. We have moved into a new paradigm for silver. It is being consumed and eaten by industry faster than we can mine it. The world has been in a silver deficit for 5 years straight. We use more than we dig out of the ground every year. The shortage is real, and it is not going away. The industrial demand is like a giant vacuum cleaner. It is sucking up all the available silver bars and coins. This is why the long-term trend is still pointing up. So, why did the price crash from 100 down to 80 in a single day? That was not about supply and demand. That was a political shock from Washington, D.C. On January 30th, the president nominated Kevin Warsh to run the Federal Reserve. Kevin Warsh is known as a hawk in the financial world. He believes in a strong dollar and high interest rates to fight inflation. When the news broke, the big computer trading programs reacted instantly. They sold silver contracts and bought US dollars. They bet that a strong dollar would crush the price of metals. Silver dropped 31% in just a few hours. This crash is what scared the banks and froze the credit lines. Banks saw the value of silver drop and they pulled back their loans. This is the danger of the paper market where traders bet on numbers. But while the federal government pushes the price down, the states are fighting back. Look at what is happening in the state of Florida. They passed a law called House Bill 999. Starting July 1st, 2026, gold and silver coins are legal money in Florida. There is no sales tax when you use them. The state can even accept them for payment of debts. You could potentially pay your taxes or buy a car with silver coins. This is a direct challenge to the Federal Reserve. Florida is saying that silver is money, not just a commodity. Other states are watching and might do the same thing. They want to protect their citizens from inflation and dollar devaluation. This creates a conflict between state money and federal money. It validates that silver is a real store of wealth. It proves that politicians know the dollar is in trouble. So, what should you do right now? The factories are full, the price is jumping, and dealers are not paying. The answer is hard, but simple. Wait. The clog in the pipe will fix itself eventually. The snow will melt and the factories will catch up. When that happens, the cash will start flowing again. The price dealers pay will go back up to match the real market. If you sell now, you're paying a panic tax. You're selling at the worst possible moment in history. You're letting fear make your financial decisions. The dealers know you're scared, and that is why offers are low. Do not give them your wealth for pennies on the dollar. Unless you have a life emergency, do not sell. Hold your position and let the market heal. The industrial demand is real and the shortage is real. You own the only asset that is essential for the future of energy. Do not let a temporary freeze trick you into losing your wealth. Stay calm, stay stacked, and wait for the thaw. The freeze is temporary, but your loss would be permanent. Be the strong hand in the market. Disclaimer, this is not financial advice. I'm just a researcher reading the ledger. If you want to stay ahead of the next market shock, you need to be here. We read the numbers so you don't have to. Click that subscribe button on the Bullion ledger and hit the bell.